I think investors with us were quite frustrated by the Greenspan period, where Greenspan was saying that
well,
if you understand...
If you think you understand what I'm saying, then you really don't understand what I'm saying.
Exactly. So I think we've moved on that space, and now the idea is that should be a narrative when they go bring rates up or bring rate down, and then the market wants to understand what's going to be the trajectory. So I think the idea is that there is a narrative that gives not necessarily a forward view, but at least gives the ingredients that will be used in the forward view. And what is happening now, I would say, Powell last week was quite powerful. What he says that it's going to be data-driven. So it means that, as you said, one number is not necessarily all the story, but you need to have several numbers to understand if they're going to continue to bring down rate and at what speed, and that they want to have a neutral position. So that's the way forward. And I think they want to guide investors in knowing what they intend to do if something happens.
To the point about getting back to neutral, I mean, this was the real excuse for the 50 basis point rate reduction because they're so far away from neutral. But just how quickly do you need to get back to neutral when you do have a labour market that is still so strong?
Yeah, you have a labour market which is very strong, but you still have a manufacturing index which is below 50. You see in the second quarter earnings, companies being quite prudent in investing because they are very scared of the election. So from the industrial side and the manufacturing side, not so much growth there. So I would say that there is also a risk of disruption with what's happening in the Middle East and with oil, and we see oil going up quite strongly. So I think even though the market, the employment market is very strong, there are other data which show that the economy is perhaps more fragile than what we would expect.
To that point then, just what sort of tactic do you take into year end? Because if you look at what insiders have been doing, they are not convinced that it's the time to be buying stocks. In fact, some of the sentiment is at the lowest level in about 10 years, quite in contrast to the broader stock market that's been travelling towards record highs. Do the insiders have it right? Is it time to just pull back a little bit and get some dry powder?
I think the market is mixed because when you look at the second quarter, it's very polarized. And when you look at the second quarter, you saw that obviously equity had a real bull market, but you also gold going up quite strongly and high yield going up quite strongly. So what does it mean? It means that there is really two camps. The one that says, okay, we could have a soft landing in the US and we could have a mild soft landing in Europe. And China is doing what is necessary to go back on track. And you have another camp that says, it's going to be much tougher than that. And perhaps the 50 basis point cut in one go from the Fed means that at one point they got worried. That's why now you have everybody going and trying to reassuring the people.
How do you feel about rotation in the market at the moment? One of the great thematics of this year was we're going to have this great rotation out of the technology leadership and the market's going to be fine with finding other stocks to lead. And quite frankly, I think people are still struggling to get away from the original narrative that actually you have to be in the technology stocks and the rest of the stuff are just also runs.
When you look at the stats for the second quarter for the S&P 500, you see that the market was broad and that there was a significant number, I don't know if it was 200 or something like that, stocks that outperformed the S&P 500. So I think the rally is much more diversified than it was in the past. And if you look at the P of the market without the seven magnificent, it's around 18, 19, while the P, the seven magnificent is at 28 PE. So I think investors are cautious by the fact that obviously there can be a lot of good news for the technology company and the AI company, but it's already priced in the market. So I found it quite healthy that the bull rally has become much more broad and diversified.